Hello and welcome. This is Business Edge on News Central, and today we're focusing on Nigeria's Finance Bill 2020. I'm Tolulope, Adelereu-Balogun. Before we wrap things up, we'll also touch base with a few stories we're keeping our eyes on with NC4 to watch. All of that's right here on Business Edge. Welcome. Now straight to our headline story. Nigeria's Federal Executive Council approved the Finance Bill of 2020 on November 18th this year. The bill was earlier presented to the state governors on November 19th. It is expected that the bill would be presented to the National Assembly for review and passed, along with the 2021 budget and the 2021 Appropriation Act. Nigeria's Minister of Finance, Budget and National Planning, Dr. Zainab Ahmed, says the 2020 Finance Bill, when signed into law, will exempt minimum wage earners from personal income tax. Ahmed said this at a public hearing organized by the House of Representatives Committee in Nigeria on Finance that held last week. She explained that in light of the current economic situation, it is proposed that persons who earn the minimum wage are exempted from paying PIT. She further explained that no new tax would be introduced, neither would there be any tax increase in the bill. The minister explained that the bill was introduced to reform and enable the country meet the current economic challenges occasioned by the COVID-19 pandemic. She said that an amendment is being proposed to grant tax relief to companies that donated COVID-19 relief funds to government to encourage such in the future. She also said that the bill will streamline the application of incentives to banks that provided financing for primary agricultural produce. According to her, the bill also seeks to clarify categories of agricultural businesses covered under the Poor Incentive. She said that an amendment of the Companies and Allied Matters Act was being proposed for the creation of an unclaimed dividends and unutilized bank balance trust fund. She explained that dividends declared and unclaimed fund would be warehoused and owed as a perpetual debt to shareholders. According to her, it is proposed that such unclaimed dividends should be handed over to government as trustees in the fund created under the supervision of the Central Bank of Nigeria, the Debt Management Office also being involved. So to break down a few of the issues around Nigeria's Finance Bill 2020, I have joining me Mukhtar Mohammed. He's the Chief Executive Officer of Astra Dynamic Solutions. Mukhtar, welcome to the show once again.
Thank you. Good morning, Tolu. It's always a pleasure being here on a Monday morning.
All right. And Monday morning, we're talking taxes. One of the things that they say is inevitable in life, death and taxes. The very first question I'm going to ask you is one that I find really interesting, with Nigeria's government promising that inside this bill, they will not increase taxes. Given the current economic situation, given attempts to diversify away from oil, attempts to even increase the tax base in Nigeria, do you think it's really feasible for the government not to increase taxes in the next 1 year, in the next 2 years? We heard recently that they wanted to increase VAT, but because of, I guess, maybe outcry and, of course, the situation many Nigerians are facing, that conversation was tabled. So do you think it's feasible for government to promise not to increase taxes?
I tell you, they have no option on this occasion. Ordinarily, they would have wanted to increase tax, but now as it stands, they have no option, because when you look at the economic indices of ordinary Nigerian, you look at the inflation figure, you look at the data that have been coming from the National Bureau of Statistics, the data that have been coming from the World Bank that said about 22 million Nigerians are going to be added to the poverty level before the end of this year. So they have no option but to do what they are doing. Unfortunately, they're only doing it to the public sector, because that also to extend to the private sector, those that are earning minimum wage. That what we think the government should go further, because not only the public sector that are going to the market. The market, there's no one market for the public sector and one from the private sector. And again, we must know that Nigerians are not against the option of paying tax. But if you look at this government right from inception, this is the only government that have always collected from Nigeria and has never been able to give back. I think this is the only time they are giving back, maybe because of the pandemic. Do you remember the stamp duty tax, the value added tax was moved by almost 50%. The tax duty tax we've paid so much taxes. You withdraw money, you pay tax, income. No, there's so much taxes the government have been collecting from them, which have increased their tax, try to increase their revenue level.
Yeah.
But like I keep saying, in developed economy of these days, we use tax as a means of attracting investment, not just to increase revenue. So that's why I think what the minister says about allowing some companies to have a tax bracket because they played a role during the COVID-19 pandemic also is a good idea.
Okay.
It's a welcome development.
Okay.
That's the only thing I think they have done. But I think they should go further and be thinking of how they can reduce the burden on companies also, not just on individuals alone.
So let's get into some of the nitty-gritty of the finance bill. So the Finance Act tends to amend, repeal, or add some provisions to some of the following: the Companies Income Tax Act, the Value Added Tax Act, Customs and Excise Tariffs, as well as the Consolidation Act, Personal Income Tax Act, Capital Gains Tax Act, Stamp Duties Act, Petroleum Income Tax Act. You have a number of overlapping, a number of acts and regulations just all lying around somewhere, and it's looking like they're attempting to bring all of this together. Taking a look at what you've seen in the Finance Act, do you think it has comprehensively sort of brought many of these acts and other things under one umbrella and is dealing with some of the issues and criticisms that have plagued these other financial and economic sort of regulations and acts that we have?
No document is perfect. I think what we need is a workable document first, and then after that, you try to rejig and jig those documents. I think that's what they will continue to do. Definitely, there will be criticism from stakeholders because some of these things tend to favor some part of the stakeholder. If it doesn't favor you, try to raise an alarm and say, look, you're not looking at this side for me. You're not looking. So for me, I think it's a good document. By and large, that we've not had such a document for a very long time. So it's a good document. It's something that is workable, and I'm happy the government is calling it the Financial Act Bill for 2021. That means they are trying to say maybe when we were presenting the budget next year, we could come up with another bill that could reduce. So it's a good thing. That's what.
Okay, of course, technology comes into play there. So Mukhtar Mohammed is my guest today. He's the CEO of Adelereu Solution, and hopefully we'll get him back. But looking at all of the things that comprise the Finance Act or Finance Bill, because it's still before some of the state houses of Assembly of 2020. So the Companies Income Tax Act, the Value Added Tax Act, Customs and Excise, Personal Income Tax, and that's where we're seeing Nigeria's government saying that they are going to exempt those who earn the minimum wage or below. And it's an interesting point that Mukhtar brought up earlier, which is it should not just be for the public sector. There are those, unfortunately, even in the private sector, that earn the minimum wage or below. And as he said, everyone goes to the market. It's not just the public sector. So you also have the Capital Gains Tax, Stamp Duties Act, Petroleum Income Tax Act, and it's interesting on this issue of the Stamp Duties Act. There's been some interesting movements because there was a court case against the CBN for collecting stamp duties, but that's a conversation we'll have at a later time. So there's also, of course, looking at the fact that some of the companies who donated to Nigeria's COVID-19 relief fund are to get some kind of tax relief. Now, many people will be asking, what exactly does that relief look like? What exactly does it translate to? Does it make sense for them to get relief, and does it make sense for them to get that much relief? And as Mukhtar said, I do agree. I think it's a very good idea. It's an incentive. It shows that you are appreciative of those who helped you in your times of need. And if it's business, this is a way you can pay them back. And that is, of course, with the tax relief. For how much is it? For how long is it? What does it cover? Those are the details we definitely want to see. We're going to take a quick time out. Hopefully we'll be able to get our guests back, but we'll get into more conversation right after this. Still talking Nigeria's Finance Act of 2020. My guest, Mukhtar Mohammed, CEO of Adelereu Solution. Mukhtar, thank you so much. And hopefully technology will allow us to finish this conversation. But let's look at another part of this act, and it is on reduction of import duties for tractors and motor vehicles at 10% and 5% respectively. Would you think that any of this would have a meaningful impact on the agricultural sector, or even vehicle purchases? I know for a long time we had an increase in the import duties of vehicles, and it was said that they wanted the local vehicle economy, local automobile economy to grow, but none of that happened. So now they've said they're reducing the import duties, for tractors as well. So do you think this will achieve the aim that they're looking for?
Definitely, Tolu. Definitely. This was part of the problem that we had that made us to close our borders, because a lot of people it was easy to take cars to neighboring countries and to bring them to Nigeria because of the kind of import duty charges that we're charging on our own product, our own cars that came in here. So that will open up a lot of things for the Nigerian Port Authority. We'll give them more revenue, because most people would rather want to clear their car right here in Nigeria now, rather than going to Benin Republic and all our other neighboring place. So for me, that's a very good thing. We clamor for it, since remember that law came into effect before the end of Goodluck Jonathan tenure. Most people thought that when this administration come in, they are going to reverse it, but they didn't reverse it. That was very high. And for the tractors one, I think that was the fantastic thing the government is doing. But will they be able to attract people to bring in tractors? And that's another thing, because there's a lot of bottleneck in the port, not just because of the import duty reduction. There's a lot of bottleneck in terms of clearance of your car, making it digital clearance so that you can clear those things within 24 hours. And then after you clear, you go through a lot of of search again, going from one gate to another. Then they're asking you to bring receipts. So we are thinking that let's just digitize these processes. If we make this process digital, it will be easier for most Nigerians to bring in their cars. I give an example. A friend of mine was telling me that he has goods coming from Nigeria to the United States of America. He didn't even have to go to the port. He stayed in the comfort of his room, did those goods, did all those plans, and they just came to deliver it for him in his house. But here in Nigeria, even clearing a car, it takes you about 3-4 days. You are going to the port. So those are part of the things that we need to begin to change. We need to begin to see how our ports can be efficient in 24 hours and goods are cleared on time. So that because in business, especially, it's time that really matters, and time is what brings effect to money. So for me, I think that's a good development they are trying to do. And if it works, I think it's going to be good, because number one, the custom will earn more revenue, and that revenue will pass its place into government. And two, the agricultural sector also will benefit from it, because that will result in low cost of food production. Low cost of foods item in the market in the long run. So for me, it's a very wonderful policy. This is a very wonderful document, the Financial Act 2021. I'm just hoping and believing that it's implementable, because Nigeria has not been devoid of good documents. The only challenge we have is how to implement some of these decisions that were made from all these documents.
So do you think, given the fact that this is going to repeal and amend a number of acts that are sort of scattered wherever they may be, do these measures, do you think they could help increase foreign direct investments, which is on the decline, and Nigeria has been one of the countries hit the hardest with actually flight of FDI?
Yes, I hope so. I believe so, because it's not that Nigeria are not attracting FBI, but like you said, we are attracting FBI in the portfolio sector. So the FBI coming to Nigeria, there's a lot of factors that are involved. Number one of those factors has to do with the exchange rate volatility. It's not that foreign direct investors don't want to come to Nigeria, but you look at the exchange rate volatility. It has been very volatile. Or at a point, it was going in the parallel market for 500. And the import-export market for 300. So it didn't converge, and that's why the World Bank saying we must come to a point where we have conversion of rates that are the same. So no investor want to come to your market and or want to come in with his dollar, and then one is exchanged for 391, the other is exchanged for almost 500. So it doesn't give him value. So once we get the exchange rates correctly, and which the CBN is trying to do now with the type of policy they have come in with, because the challenge with exchange rate management in Nigeria is not, it doesn't have to do mostly because of the low reserve. Sometimes it has to do with policy decisions, especially from the Central Bank of Nigeria. And I think they are beginning to realize it, and they are trying to amend some of those decisions, like a sending of money, you will be able to collect it with the currency that is being sent. So that has brought down the rate in the parallel market, and we think that will continue to improve, especially going into the festivity period with the vaccine coming in next year. A lot of Nigerians in the diaspora also will be working They will have more jobs to do. And then the price of oil again also is going up. So definitely it's looking good for us next year. And with such decision, I think when we begin to attract foreign direct investors, one will have stability is the exchange rate. We will definitely attack them. But my own challenge is that let's attract foreign direct investors that are coming here to create jobs, that are coming here to sit here, that are coming here to develop our economy, not attracting foreign investors that are coming for the hot money, the equity market, the treasury bill space, because those ones are out there for the gains and then they'll exit. But we need people that will stay here, have the gain, then try to build our economy with us.
Okay, so another interesting part of this was about the unclaimed dividends and warehousing of said dividends as well. And government setting up a trust fund, governments being sort of like, I don't know, the administrator or whatever you have it, until the person comes or their family member, as it may be, comes to claim the dividends. What do you think about this in terms of how effective this could be as a debt instrument, how effective government is? Do we trust government to hold things in perpetual trust for people? I have some unclaimed dividends somewhere, and hearing this, I was like, I want to quickly go and get my dividends because I'm not exactly sure what governments will do when they warehouse them. What are your thoughts on this?
I totally agree with you, Tolulope. I am not in support of them. I am not. That's a sector I play in. I think the Security and Exchange Commission also are against it. A lot of investors are against it. The National Association of Nigerian Stockbrokers are against it. Any writing investors will be against it because it's not government money. What the Security and Exchange Commission does is that these monies are with the registrar. After 10 years, the registrar returns this money to the companies, and then the people that own this money, anytime you can easily claim your money. I don't have to start going through one government bureaucracy to claim my own money. I don't think it's right, and I think that's another way of government trying to use public fund to their private fund to their own advantage, because they are not the owners of those funds, and that means they have a description to use the fund as they want, because they are not trying to merge the fund with the debt management office fund. Am I going to get any percentage increment when government use such fund, or how long government keep those funds? I don't think it's right. I don't think any government or any part in the world does not do that, and Nigeria should not be an exception. The world is a global global village, and we should do our business the way business has been done professionally all over the world. You can't be, as a government, you want to begin to take unclaimed dividend, you want to warehouse it. So if the owners of the dividend comes, how do they claim it? With the kind of bureaucracy we have in government, with the kind of corruption we have in government, how much have government be able to manage their own debt? How much have government be able to manage their own affairs? You hear today how a petroleum ministry will spend 46 million naira just in purchase of biros, pen, and you are telling me that I should keep my unclaimed dividend with them. I think no. What I expect the act to do was to begin to make it mandatory, like what the Security and Exchange Commission have done, that people should mandate to collect their dividend, publish those names of dividend, try to make it easy for people to claim their unclaimed dividend, because most of these unclaimed dividend are dividends from people that have passed on, and they have children yet. So they need to make that system for them so that they can claim it, because these people did not just work, they have children, they have relatives, so what the government should be doing is try to reach out on how people that are passed on, because those that are alive will definitely claim their dividend when you publish their name. But what of those that are deceased? So you need to begin to think of how those families of those members will access their dividend, not for government to want to warehouse that dividend for the sole reason that they lack funds. They want to see those dividends as a means of using it to do some project. I think it's very wrong. I'm not in support of it. And
a lot of people will be worried. I know with this news, a lot of people will run to finally claim some of their unclaimed dividends. But Mukhtar, as we wrap up,
like you,
like me, definitely, I'm definitely heading there to the register. But as we wrap up now, let's just talk about small and medium scale businesses. So we know that the bill is before the National Assembly, and they're saying that it's going to bring incremental changes to the country's tax laws, which are burdensome. They are left, right, and center. There's overlap as well with some of these bills. But we know that the federal government has also proposed an exemption of small businesses from the payment of the tertiary education tax as part of measures and incentives to assist small enterprises. They're also proposing a reduction of the minimum tax rate to be paid by companies in the next fiscal year due to the current economic climate because of the coronavirus pandemic. Now, you've said about 2 or 3 times that you think this finance bill is a good document. So from you, what are your 1 or 2 takeaways, your top positive things coming from this piece of legislation?
My takeaway is that they're beginning to look at how to revive the SMEs, how to give tax incentives to most companies, because in time like this, all over the world, companies have enjoyed tax incentive. Companies have even enjoyed direct favor from government taking upon themselves to pay some staffs their salary that companies are not able to pay. So I think it's a good thing that Nigerian government is beginning to think globally, because that was what every economy all over the world have done to make sure that their companies are still in business. They try to intervene in area of tax bracket and all that. So I'm very happy. That's my takeaway from this bill, is that government is beginning to look at how to help businesses grow, not how to kill them the more. I think for me, that's a good one from this government.
All right. So of course, the conversation can't end there. There's going to be much more as we look at some of the things. News coming out over the weekend about a judgment actually against the central bank regarding stamp duties and bank accounts. So we have a lot of conversations as financial news comes out. But I want to say thank you to my guest, Mukhtar Mohammed, CEO of Astro Dynamic Solution, for joining me as we looked at Nigeria's Finance Bill 2020. Thank you so much, Mukhtar.
It's a pleasure, Tolu. Do have a pleasant day.
Same to you. All right, we wrap things up as we always do, and that is NC4 to watch. We start on the eastern part of the continent, where Kenyan banks are expected to experience more losses in the coming year as customers struggle to service their loan facilities. Uncertainty posed by an upsurge in COVID-19 cases will continue to slow down the economy as jobs and incomes get eroded. Zambia is in talks with the International Monetary Fund for financial support, even as its economy continues to plummet due to years of crisis, which has been made worse by the global COVID-19 pandemic. In November 2020, the country became the first African country to default on its international debt since the pandemic. The copper-producing country failed to make the $42.5 million in interest payments expected by investors on its 3 euro bonds in mid-October. It also was unable to honor payments as at the end of the grace period. Militant violence and abuses by security forces have made sub-Saharan Africa the riskiest region in the world for business and investors. This is according to a new report. Much of the concern was over Boko Haram's attacks in West Africa, as well as other militias in the Central African Sahel, with a warning that conflict could continue to spread regionally. The report highlights risk for companies and staff at sites and transport routes and warns that government forces also pose a risk. And finally, it has been a bitter holiday season for the makers of the foil-wrapped Hershey's Kisses beloved around the world. For nearly a month, a battle has been raging between the Hershey Chocolate Company and the West African farmers who harvest many of its cocoa beans. And it appears that the long disenfranchised farmers may have scored a rare win. And that's it on this edition of Business Edge. Thank you so much for joining me. You know what to do. Head to our social media pages and, of course, our websites for more business and financial news from across the continent. And until next time, I'm Tolulope, Adelereu-Balogun.